The first thing to state is that this was, believe it or not, I double-checked the Bloomberg, the first annual revenue decline that Tesla's ever had. So revenues, overall revenues from all its divisions dropped 3%. And they blame that on lower vehicle deliveries and sales and lower regulatory tax credits. So that's kind of interesting. But this shareholder deck is about the future where Tesla doesn't sell vehicles as its principal line of business. It does physical AI through robotics and through robo-taxi. And as it relates to xAI, there were definitely two schools of thought. There were the Tesla bulls that basically said, if they invest in xAI, all of this stuff will happen quicker because xAI is so good at the software side of AI. There are very bullish Tesla shareholders that were like, whoa. This xAI is a company that burns billions of dollars a quarter. Do you want Tesla to be the entity that's propping that up? If Tesla's already doing work internally on software. So this was a really interesting deck. The quarter's numbers gone, the quarter gone. I mean, it doesn't really mean anything at this point.
James Cakmak, come on in. Ed, highlighting that Tesla agreed to invest about $2 billion in Elon Musk's xAI startup. We talked with you a little bit about Tesla before, a small position in your fund. How significant do you think that is? Does it make it more interesting, the Tesla story here?
Yeah, I mean, it adds another element to the story, but that's not why we're investors in it. I don't think that's going to be something that's factored in a material way, one way or another, at the current time. So we're looking at it from a long-term standpoint, the optionality on all those areas that you listed, from robotics to self-driving, autonomous driving, and that's where the opportunities lie, and that's why we're invested in it. But at the valuations that it's at, and question marks around the demand side, and given the macro backdrop, we just think it's prudent to be cautious with it, but still maintain a small position in the portfolio.
But keep that small position and not make it any bigger.
At this time, I got to listen to the call, see what happens. I mean,
but you could hear something today. You could hear something today that would make you change your mind.
If and only if it provides a change in my estimates. Because really, one of the things that I focus on, I prioritize is what is the degree of the change in the estimates in absolute terms, and also what is the percentage change in absolute in estimates, and what is the percentage change in the rate of growth. Because these companies with these valuations, you have to be able to show the sustainability of those growth curves. Without that sustainability, then you come into questions about the sustainability of the valuations. And with these valuations being where they are, not only from a stock perspective, but the market perspective, one little thing can cause things to break. I mean, you saw what happened with Intel last week, down 17% on that quarter. And, this is a company that the White House is backing. So, it doesn't take, it takes an instant, to break the valuation, even though it takes a long time for that valuation to expand. So you got to be careful.